This is Justin Pulitzer. This is my weekend review for the week ending February 15th, 2015. Happy Valentine's Day and President's Day. The market is closed tomorrow, but that doesn't mean that we can't discuss some levels and some trade setups that are some good housekeeping and also going forward. So let's hit the charts. We'll start off in SPY as we usually do. You can see that the market has resolved itself higher. We did take out this 208.97 high, and we are pressing ahead. This looks like we are in a W pattern that has now broken to the upside. You can see here the responsive nature of the market. The low here to the tick was 197.87, and this one as well was 197.87. We came back up, and here we held the 50-day moving average and then rallied, and this broke the pattern of these 100% retracements that we've continued having, and it actually resolved higher. So my thoughts are that we've come up very quickly, and that the bias is still up, but I would say that there is a risk of some type of a pullback, maybe to retest the breakout range. So, I talk a lot about SPY ranges, and we are now in a new one. As long as we are over 208.97, the market is obviously still bullish. I had discussed that this algo-driven spike could possibly be a potential target. That was 112.97. That may still be on the table. However, if we do pull back, the new bogey to stay over is this 206.42. That was the peaks of these ranges, and you can see the breakout when we broke the downtrend line. That's really where we were struggling to get over, and then we finally got over it. So the 50 held, we've broken out. I'd be looking for any type of a pullback for this range here between this 208.97 and 206.42 to be the new upper distribution that needs to hold. If not, then we're talking about 205s. So if you take a look, in addition, the ES is kind of confirming the same thing. This also had the W pattern, broke, came up. The only caution I would say is that the ES had been in a bit of a channel, and you could see any moves above it got a little bit unsustainable. And that channel high starts coming in kind of soon, actually. It's just above us here at 201.10, like 211-ish. So, I'm sorry, 2,111-ish up here. So a little bit of caution coming into here. After so many days up, there might be some type of a rollback. And, the high of this range here confirms roughly about this 2062-ish area. Between 2062 and 2062-ish half, that was the breakout and the important area to hold. IWM, similar pattern. All these major indices look the same. IWM, I've been talking about this 117.37. Anything above there is bullish and keeps the highs in play. And you can see we've now made some new highs. IWM was actually, I believe, one of the first to do it. But we are coming back to the backside of this prior uptrend within the channel, which had been support, then a little bit of resistance here. However, the IWM does have some more room in a lot more room in the channel than it did. It's showing in the ES, and that would take you, if it happened immediately, right up to 125s. It would probably take a little time, so it might be up in 127s. In some later videos, I'm going to do some Fibonacci extensions and talk about where I think we can go up here if we do have some type of a blow-off continuation. But for now, I think the channel high, the channel references are what is going to matter. I'd say that there's a little bit of time before that would happen. As far as a key level to hold, 119.30, that's this spike day high. I think that a rollback to there between this 20.58 and 119.30 is key for a hold. If that breaks, we may want to come back down and retest into the channel lows. I'm not sure how fast that would happen, though. These indices do look like they are fairly bullish, and a little check back wouldn't kill it. Holy cow, the Qs. This is actually up into a Fibonacci extension that I had done. The old all-time high of NASDAQ 5000 is obviously a little bit higher, but this is fairly bullish. We did have also the W pattern breakout, and I would say that any type of a rollback between this old high here, which was 105.26 and 104.58, I think would still be bullish. That would just be some type of a check back into range that I would see as being healthy. This does have room to continue, but you can see it's been up multiple days and it is getting a little extended. Keep this chart in mind when I talk to you about Apple, which will be coming up shortly. That also has some interesting levels that we're coming into. TLT, I talked about nailing the top. Man, I had talked about putting on a put spread, and the play was the 132, long 132s, short 127s. I wound up taking off a lot, some the first day on the snap, then some more down here, and then down here I was pretty much out. Man, I wish I held it. This turned out to be perfect. We are now, though, coming back to this this spike high, which wound up being a high for a while, and you can see here it resisted, and then we came through it. So I'm thinking that TLT might find some traction, at least for a bounce. I do think that this thing is way overbought. I actually had mentioned that on the Benzinga show up near the highs, and they had asked me anything that I see as being really majorly overvalued, and my answer was TLT, and man, was that prescient as well. So you can see, I think that this 127.68, somewhere between there and like this channel low in 126 I think this area is going to wind up being some support, at least for some type of a bounce. But you can see we broke the 50. It's getting a little steep. So that is my opinion on TLT. Let's see. Crude, I had talked about this look below here and fail, and then you had to squeeze up, and it's just been consolidating in range. And it is kind of peaking a little bit above this downtrend line. If this rolls over, we're obviously going to come back and retest the lows. And my guess is that these lows aren't really, they're poor lows, meaning there's no elongation of range. So we probably would test a little bit lower into the 30s. But on the other hand, I know a lot of these companies are starting to do production cutbacks and closing down rigs and stuff. So if we take out this 54.28, I think that there could be some type of a squeeze and take us back up to like the low 60s, somewhere in this like 63 range. You can see though in the volume profile, there's not really all that much to hold it back, and you could have some kind of real spike move back up and take you back up to this like 73, 64, which is really where the volume distribution starts. Keeping that on mind, but we would have to take the 54.24 out first for that to be in play. So that is what I'm thinking with crude. GLD had a bit of a breakout, but it turned out to be a bit of a false breakout. I was kind of looking for it to come up here into these 127s, and I had discussed doing some type of a buy down here in the 119s. That was looking like it might work, but it kind of failed and is chopping a little bit. The key level for me, gold is a very technical. It respects technicals really well. If we can't take back this gap high of day, which was this 119.52. I think if we can take that up, we'll fill up the gap and get back into this channel. But if this fails, I would look for the 61.8 to be the first target, which is the 115.75. And if that fails, maybe this hard deck I had been talking about for a while, which had held, we broke and got back over, which is around that 114.46. So I do think that this area here will be a very key level for gold, and would be a good row right or right out trade. If this pattern is still good and we do take this high, I do think you can play it long for a move back up, and it would be still yet a higher low, and maybe we would come back up for those 127s. If you take a look in GCs, it's kind of about the same. With the 61.8 would be a little bit lower. That would actually be a snap of this trend though, slightly, although this could just happen with some noise if it's like quick. And would also be a retest of this previous downtrend line. This would all be a nice confluence roughly around 1198.20, which is close to 1200. So if this is just kind of like a dead cat bounce here and we roll back over, this area I think would be a prominent test. If we do wind up taking back this area, particularly if we could take back this dump bar of 1269, that high, then I think we're going to continue up into this like 1300 area and may look for some more highs. But I usually play it with GLD, and that's what I'm looking at. But you can see here with GCs, that would be the pertinent levels. So that is gold. Apple, hooah! Made some good coin on this one. I had discussed taking some profits in 125s and 26s, mostly out now up here. My play was to take out the 119.75, and if we took that out, that would put the 128.97, which is the big 101.618 fib extension, into play. We're also getting, the reason I took this off a little bit, a lot of this off, was just because of the way it came up. It came up really, really sharply, and Apple tends to like to fill gaps and things like that, and there's a bit of a chase on. I also see this channel up here, which is getting me a little bit concerned, and I had discussed that also with the Qs. So we may do something like grind up a little bit and get up here to get the completion, and I do think that is likely. If this does bust, there could be some type of a blow off top, and this would put this resistance into play, which is kind of similar to what I talk about in Gilead. My chart is frozen. Wonderful. If that does happen, that would take us somewhere up into here, which is roughly, depending on how fast it happens, but if you connect these highs, you can see that, and that could take us maybe into like 133s to 135 possibly on some type of a blow-off spike move. So I'd be looking to kind of start closing this trade out and maybe looking to re-enter on some type of a pullback to trend, which would coincide with a retest of the breakout, which was the 119.75. If that holds, then I think we probably can go higher and start getting some of the levels Carl Icahn talks about. If that fails, then I think we're going to see the 115s quickly and possibly maybe fill up the gap. I still think Apple is bullish, and I think that people are going to be looking to buy the dips, so I will be doing a row down there. If you want to play it here, you can do some type of stock replacement. The IV in Apple is really cheap. I would suggest doing some type of a call spread and maybe on some weakness selling some puts then to finance that call spread and playing it that way for more upside. So that is Apple. Amazon. I had discussed that playing this thing long for the gap fill, and it wound up working really well. And I had said that if there was some type of a rollback to like these highs here in the 341s, it would be a buy. But Amazon had other ideas. I think there were a lot of people who were short this name, and they got their bells rung. And I'm thinking that this probably, it's been doing it in a bit of a grinding fashion, so that I don't think there's really that much capitulation. I think this could easily see these 383s and possibly want to come back and retest the old high up around 408.06. If I were, I'm currently not long this. I'm sort of sorry I'm not. I may look to do that this week for this type of a play. I do think it's going to want to retest those old highs up around 408. If there is some type of a pullback, same levels apply. I'd be looking to get long somewhere in here, closer to the earnings gap range that day. So that is Amazon. If long, stick with it. American Express. I had discussed this being looking a little bit like a problem here, like it had broken, it didn't get the full range extension again, rallying ahead of time. I keep discussing that, and I had said that we were coming into some resistance here, and whammo, they lost their Costco exclusivity, and the stock has come down. But look where we've come down to. Our reference low here, although we did violate it a little bit. We've done this on some enormous volume. There might be a little bit more to go, considering the second day volume is a little bit more than the first, but we are coming into some reference ranges. I had discussed this gap fill about the 76.32 being a buy, so somewhere between here and there should be a buy. You can see I jumped the gun a little bit. I had sold some puts this day. I may do something to defend it if we lose this gap fill area. I'll turn it into some type of a put ratio. If we lose that, then I think the 72s are in play. There's another mini. Can I get over there? Let's see. Maybe I need 2-year daily. Let's see about that. Yeah, there's a mini gap and also some reference lows down here. I think that this area is going to hold. I think this got a little bit overdone, although I don't like that it's coming from lower highs. I don't like that this rally was a little bit premature. I would have liked to have seen this come down and make some kind of equal low. I'll probably be looking to take this play off on some type of a bounce if we get it prematurely. If not, we'll do some defensive action with turning into put ratios or maybe even selling common to neutralize deltas. But as far as I'm concerned, the play is the same. I am thinking long here for some type of a bounce, maybe to fill up this gap at some point eventually. You can see the earnings are coming up here. If the stock is down really huge into it, there'll probably be some clarity. Maybe it gets some type of a pop. If it rallies ahead of time, then we'll reevaluate. But for me, the key level, if you want to play for the gap fill, obviously you have to take out that 81.53. I'm looking for row down here around 76.32. I'll probably do that with common for right or right out. If that's wrong, obviously it is right or right out, and then I would be playing for some type of a move down to 72. So that's American Express. Let's see what's next. Baba. Baba didn't get down to these 82s like I would have liked it to have. Instead, it had poor lows, and it decided to kind of rally up. I discussed on the stream, someone had asked me about it. I said over this high of day, over 87.70 is a long, and I think that there could be some played to the backside of this this channel, which roughly also coincides with a big major volume node in the 90s. So I'd be looking for this to have a little bit more room here. It may want to break back in and then come back up. I am bullish on this stock longer term, but there is an overhang with YHOO shares, so I think the stock is going to remain under pressure. I would be cautious. We're just still in this earnings gap range here. I would say if you want to play it, you have your reference lows here. If this breaks here, then I think it's definitely a short down to 82s and possibly even lower. But this is starting to look like the pattern is maybe bending back up a bit. I think a lot of people were waiting for this, and if they aren't in, they might want to do some type of a chase. But again, the YHOO shares are coming locked up, and I think that is going to be weighing on the stock a bit. YHOO, on the other hand, reported earnings. They had been way up here in pre-market or after hours, and then it really opened up much lower and was just sold all day, and it's just been in this chop range. I've been looking for it for a buy as on the channel lows, which would roughly coincide with this gap fill somewhere between 80.48 and 40.48 and 40.18, this area. It would also coincide with this channel. I don't like that it bounced ahead of time. A lot of these stocks keep doing this. It did come down to this reference gap area, and it's been holding. So this may do something like take out the high here and then want to continue higher if the market stays bullish. But I'm still thinking down here, and that to me would be a good right or right out trade with YHOO. I would do it in smaller size. I'd probably sell some puts, out of the money puts, maybe 36s or 37s, because that's also some reference lows. We'll have to see what the IV is like when it gets down here. So that is my thinking with YHOO. Another one that gets discussed a lot with these stocks is BIDU. It's another Chinese stock. This to me looks like a bit of a pattern breakdown. I had discussed that this area over 226.76 was bullish with having to hold this 217. You can see we broke it. Shouldn't say we broke that. It broke that. And I was talking about a row play somewhere down here between 194.31 and 191.17. I believe the after hours low here did get 191, and it rallied. It wound up being okay. It did kind of fill the gap here. It did come into some resistance, so I would be really cautious with BIDU. I think it could potentially roll back over. If you do take out the Friday high of day, it's potentially possible to come back up to the downtrend line. I would be trying a row short over here, actually. And if it wound up rolling over, then, obviously I'd be looking to cover back down here. If it broke out here, then I would be looking to actually flip and go long for a play back up to these highs, to these 237s. But this pattern to me looks a little bit bearish. You can see it came back up, and there may be some rollover with BIDU. It's not really one I trade that much. I used to a while back. I had a lot of success with this stock previously, but it hasn't really been much on my radar. I know a lot of you guys are interested in it. You can see there's a lot of volume here, so just be careful if you're long. I would be looking to maybe start scaling out of that if you've been long with that one. Facebook. How about we do that one? This one has been a bit of a choppy mess, so to speak. As long as it's over the 72.59, which was really the old high before this all began, I think the stock is kind of quote-unquote still healthy. You had this gap fill here after a lot of chop, and then there was just like what looked to me like institutional selling, just because it was day after day after day, and it's just been really choppy here. It wound up coming back up, failed at this downtrend line, and then came over. I had talked about a play of being long a risk reversal and short puts. I actually flipped the puts into a put ratio. I had been short 72 half puts, which coincides with this area, also this higher low, and now also the 200-day moving average. It was no coincidence that I chose that strike. But the fact that it was weak with the market being strong had me a little cautious. So what I did was I sold more 72 half puts, and what I did was buy the 75 puts. So this area, 75 has been a really key level for this stock. If this wound up coming back down, that would put the break even roughly around 70, where I do think that there would be some responsive buyers. If this breaks here, then you could do something like short stock to neutralize your delta, which just means you wouldn't be taking on losses from the skew of being short more puts than you are long. So I'm just looking for some type of a rollback maybe into this area. I'll probably wind up taking off the long puts at that case and leaving the short puts on and being long at that point, but this could be row with the 200-day moving average. I had discussed also on the stream if we took out this high of day, which was the failure at the downtrend, to go in long, which would be over 76.87, so 76.88 would be your trigger. I think if that happens, we come up quick to the 78s and maybe even back up to the 80s. Longer term, I am really bullish on this stock. I just don't love the price action with it lately, and I am no ideologue when it comes to stocks. When I see price action that's crappy, and when I see a market rallying and a stock is kind of not, I get a little bit cautious. So I do think that there is potentially some downside to the 200 MA. If we do break this area up here, I think the play is definitely long. I think that would catch a lot of people by surprise and the stock would rally. Hard to talk about Facebook without talking about Twitter. Stock's holding well. It's actually testing a little bit above the gap high of day. I had been talking about some type of a rollback to this area, somewhere between 42 and 45-ish as the new range. If there is some type of a rollback, I still think that that's an okay play. But this may want to continue higher. I'm bullish on Twitter longer term. It is getting a little bit extended here with the stochastics, and you are coming into this gap fill area. And I had discussed playing this long, that 44 and then 48 would be the target for earnings, and that happened. So you are coming back up into some reference areas with 50, being the IPO high. I do think that this area is going to find some responsive sellers, so I'd be looking to book some profits. I do think it is possible at some point for Twitter to get back up to the to these highs in the 55 area, but it might be choppy. You can see what had happened after the earnings the last time it had a good earnings report, as it came down. Then it wound up coming up, and then it was really just choppy in this area. It wound up being somewhat strong. I think the better play with Twitter is to be short puts on below, into that area, somewhere between 45 and 42. So that is my thinking on Twitter. I do think the stock is looking bullish. It's probably going to go higher, but the easier to stomach play might be to be short puts as your long proxy. FireEye, I get asked about a lot. It's not a management I like. I've discussed that in the last week video, but I did say I liked the pattern and that I thought the bias was up, and it was. Same thing with CyberArk. I don't have a lot of time more on this video for these, but you can see this was doing a pattern of the higher lows, which I like, and then the higher highs. Set up really well, with all the hacking that's going on and the internship and all that stuff with that movie with the North Koreans. It seemed to me like companies would be looking to up their cybersecurity. I think that there's some room to this this channel high, which roughly coincides closely to the IPO high. I'd be looking to book some profits though if you were long this up here at 41.82, which is the last reference high, and then the IPO day high somewhere up here close to like the 44.45ish. I think would be a good idea to book some profits. If this does wind up coming back into range, I think it's okay to own it somewhere in the mid 30s, somewhere between like this 36 and 34 area. Maybe sell some puts if it did wind up coming back down there. So that's FireEye. Google, I was discussing that I like this pattern. It was setting up a bit of an inverse head and shoulders and sort of a cup and handle, and I kind of jumped the gun a little bit on it. I put on a risk reversal. I took a lot of profits in that. I am looking for this to go a bit higher though, up to this 200-day MA, or roughly around 555 has been a big number in with the algos with this stock. It's also sort of where this volume picks up. But I think that there's some room maybe up to the 58s and maybe even up to the 567s, which was really where this breakdown was. So I do think Google is a long and would be looking to add on any type of an early dip next week as long as we hold over this 543.93, and between that and 540.41, anywhere over this breakout area I think is bullish. Google to me looks bullish. This has been a really choppy stock, so just be on your toes in case there is some type of a pattern failure, but I think bullish. Las Vegas Sands is one that was brought to my attention by Johnny T, one of my followers, and wow, this is a pretty interesting pattern. This isn't really a stock I follow very often. But I want to show you something that is a rare pattern, and when this happens, it's a buy. At least for a right or right out type of a play. You can see we had a very long-term uptrend, primary trend. I don't know how far back this goes. Let's take a look, maybe 5 years weekly. Yeah, you can see that this touched here. It started way back when. I don't want to go too far back, but trust me, I know how to draw trend lines. And we wound up breaking it, and let's bring it back to modern day. You can see we broke it, had the check back here, took back the check. Obviously, when a check back fails, you roll over, but we were making higher lows in here. We never took out this low, and now it rallied back up over the down, into the prior range, took out a downtrend. Geez, obviously you can see this isn't a chart I deal with very often. That's why I'm not as familiar with the time range. But look, you took back the downtrend, you broke the downtrend, you got back over primary trend, and more importantly, you took out the highs of this failed check back. So the break of that downtrend and the takeout of the check back to me seem bullish. I did a play with this where I sold some puts and bought some calls. I'll be looking to turn that into a call spread as we, or even just take it off as we come up into the 200-day MA and these reference highs around 65 for some type of a filling up of the triangle, so to speak. So that is my target up here. I'm looking for a move into the 65 area. So I'm thinking that this LVS pattern looks really bullish. Again, if you missed it, it was a breakdown, a check back, and then the check back now is a failed check back, and we are taking those highs. So to me, this pattern looks really bullish, taking out the downtrend line. So that's Las Vegas Sands. Microsoft, I know, is one a lot of people are interested in. This is again one that rallied ahead of the more strong support, which makes me a little more suspect of this this premature rally. I was looking for a long somewhere in the between the 37.5 and 38.98. So this area, we never got there. It rallied back up. If you're long, 43.20, which was the gap high a day, is your reference. If you're long, that you don't want to be long if it breaks that. I do think that there's some room, I guess, a little bit more up into this volume distribution. You may even get the full gap fill, but if you bought these lows, you're probably going to want to look to take some profits around the 45s. I think that this area is going to be some resistance in the stock, just because that's where this real breakdown took place. and these are the reference lows from before. So anyone who was long is probably going to want to be made whole. I know this has been a hedgy hotel for dividends. It's also, if you look, if it comes back up here, it roughly coincides with this secondary downtrend line on the 50-day moving average. So I think that this area will be a spot for a row type of a short for some type of a rollover. If long, though, stick with it for that move. Price line is one. I had discussed that this area was key. Probably would be playing it long. It wound up being long. We are now up to this down channel area. Book some profits. We are coming into earnings. You don't want to get slammed. This I think was down originally on a lot of Expedia worries. It didn't really go down on that, and it wound up rallying. Expedia did some type of a deal with Orbitz. I guess I'll make a minute to go over that chart. But you can see we're here. If this does break, though, I think that there's room to the 200-day moving average and this volume distribution, which is 1163. And then potentially, if earnings are really good, you can even see the channel high up around 1266, which comes in roughly near where these highs start to play. So I'd be looking to book a little bit of profits if you're long. If you have good trade location, you probably might want to roll it into some type of a call spread to lower your delta and minimize your risk. But price line, to me, looks like it could potentially have some more upside. If it does wind up being a down move, you really want to see these 990s hold, or you're talking about 847s being the next really big reference support. I am sort of going to wait until right before the conference, right before the print, to make the decision on how I'm going to play it, if I'm going to play it at all. I may be looking to play for continuation if there's some type of a break over this channel, playing with some type of a spread for the highs, or playing for continuation lows. It might be a second mouse gets the cheese, so to speak. So I'll let you know what I'm doing with that during the week as we get a little bit closer to the earnings. Tesla wound up being a pretty crappy conference call. Elon Musk might have been high or drunk or something. He was talking about the stock having the same valuation as Apple. He was like giggling about spending tons of money, was tweeting about SpaceX. I think Elon Musk's a genius. It's hard to, they based Iron Man off him for Pete's sake. The stock, though, did do something that was interesting. This stock, to me, and the story of Tesla has always been this. It's a poorly distributed stock with high concentration of insider ownership that is heavily shorted. So I think that the fact that it was down and wasn't down more than a expected market maker move, a lot of people took that opportunity to go, oops, and covered, and they did. So Tesla now is just back in this range, this like 203 to 206 chop. I don't see an edge in the stock other than the fact that it couldn't go down really more on earnings, and there had been some responsive sellers in the channel high. My thinking is the same about the stock. It's either a buy down near these reference lows of 177, or possibly on some type of an overshoot to the channel low around 166, 167, or on a break, which would cause a squeeze, and for me, that would really be the better play. Everyone talks about, every of the talking heads were talking about how they would have liked to have bought it on some type of a dip down here. That's not really how momentum stocks work. They work when they are either the momentum playing it short going down or long going up. So I would like to see some type of a break of this channel high and then a break of this swing high here, which would be over 225. So it's somewhere over 225 and 228.5, which would be roughly around with this 200-day moving averages. And then you get some type of a real squeeze going up to like 250 and maybe even up to 265 to fill up this triangle. So I'm thinking the same thing that I said before, buy on the channel low for some type of a bounce, or to really take it in size on a break of the down channel for a rally back up much higher. So that's Tesla. WWE is one I had discussed on the channel in my stream, but not really one I had discussed in these videos. But this is an example of as my good buddy Peter talks about, a seller shut-off pattern. You can see that this had been down for multiple days. I mean, look at this thing. It made new lows, and then in one day, wham, took it all back. So when you see a pattern like this with a big emotion that takes out a downtrend line and then gets you up to over other highs, anything over that high of day is a long. And this was on really good news of better subscriber growth. And you could see this just kind of bull flagged and came back up, and wham, you got, I don't know why this was a surprise on the earnings, came back up, basically filled up to these lows. I had taken a lot of profits up around 16. I'm now fully out of the trade. I took it off in the 16s, but I think that the stock could go a little bit higher to fill the gap up to the 19s, but it's really a hard play now because you are backed up to these lows. For me, this is mostly a fill. It's bad location, but when you see this pattern, really the moral of the story is when you see this type of a pattern, you want to go with that, because this caught all these people who were chasing short wrong, and they got served, so to speak. So that's my thinking on that's a pattern that you might want to play in the future if you see it. So let me circle back quickly, since I have a couple of minutes, to Expedia. This was one that was a bit of a conundrum, right? I think a lot of people had been looking for this as some type of a breakout here, but the earnings came out and the stock gapped down low, spent down here for a few days, and then they had this Orbitz buy, and the stock wound up being a pattern failure, and it was almost like a professional gap. And I had talked about playing this on the stream with taking profits in 90s and then 92s, which was the old reference high, and then it wound up selling off and came back into range. But I think anything over this 88.76, the stock is still fairly bullish, because that was really the breakout. You can see it was just chopping here, and I would think that this stock probably stays strong. If it does wind up rolling back up, rolling over, no big deal. But I would use that this high and low, this day's high and low, this 86.35 and 92.52 as your key levels. If you could take back out this 92.52, I think the stock is going to have a considerable run and probably get to 100. Just because when you start getting over the 90s, people start thinking big round numbers, and it would be some type of a Fibonacci extension. I hadn't planned on discussing this one, but I will in next week's video and show you the Fibonacci extension. Anyhow, with that said, let's have a good trading week. And if you like this video, please be sure to hit the like button. It's right below the video. Be sure to follow me on Twitter. My handle is @JustinPulitzer. Comments and suggestions are always really encouraged. I really like to hear from you guys. That helps me make these videos better. If there's something you like or didn't like, let me know. And let's have a great week. Cheers.